everybody. Welcome to TraderMerlin Show for your Wednesday Hump Day edition and the funeral day for First Republic Bank. It appears that's going to be our topic du jour for today. On other news, as you probably saw from the graphic here, I had AI generate a picture of me surrounded by the COVID virus because guess what? Got it again. Funny, you go to a Fish concert twice. I've gotten COVID from Fish concerts. So, in order to maintain my health and not do these shows so I don't have to focus on the markets, I'm not going to do a show Thursday or Friday, but I was told not to do one today repeatedly, but I said, I'm going to do it. I got to talk about FRC and let everybody know as opposed to just disappearing for a couple days. So I'm fine. Don't worry. I just have a high fever and the body aches, but other than that, it's going to be fine. So let me and talk about the popcorn trades of the day. Of course, Pepe. Big Ed brings up a good point here, and I've talked about this quite a bit, and I think this was actually a conversation we had yesterday with an individual who said he put all of his money into FRC at $14, and I was like, dude, you're gambling. It's super gamble, and I mentioned that there is, with the trade I have on First Republic, I have a good amount of money in there, but it's not all my account. It's not even a large portion of my account. So there's risk management that needs to be done here. And Big Eb says FRC from 171 to $5 actually went less than 5 today. And it's low. Is a reminder to never have more than 5% of your account on any one ticker, at least for me. Yeah, and I think that, the more that we do this, Big Eb and others out there, the more that you start to learn your rules, your preferences, and kind of what breaks your back, per se. In this case, for that individual who had everything in First Republic, I mean, it could not be more of a gamble. It's the most volatile thing out there. And I asked you guys the question. I said, what's the worst possible outcome that could happen with First Republic? And someone says, oh, it gaps down, you get executed the shares. No, the worst possible thing is that it gets halted and goes into receivership or bankruptcy. And that is the rumor that may happen in the next couple of days. So let's talk about First Republic for just a second. We'll look at some of the charts here, and and then we'll. I love reading through your comments. It's great. It's okay. I'm surprised I got sick actually because I was very careful at the show. So anyway, let's go to our charts here and look at first. We'll start with First Republic, and then I'm going to go through at the end and go through overall markets. By the way, you do know that Jim Cramer recommended First Republic. You all know that, right? So that should have been my first sign to not touch this thing at all. If he said First Republic's a good bank, basically if he says something about a company, it's garbage. It's going to zero. So the low today, intraday, for First Republic was $4.76. Ridiculous. So that's another 29% slide today for First Republic. That's coming on the heels of like a 50% slide yesterday. So really just crazy, crazy, crazy. Big Eb says reasonable stops would have took us out long before it got to $5. It would have. In this case, I've been doing with options on kind of a weekly basis, and I'll show you that because for me, it boils down to a specific number, which what is my cost basis, right, for First Republic. I've been collecting a lot of premium on this one, and I'll show you all the monthly or the weekly premiums that I've been collecting on First Republic, and then show you ultimately what my max pain point is on First Republic, and we may see that happen here, but let's just look at the chart for a second. So obviously, one of the main reasons I was drawn into it was the big decline, the fear, and then when Bank of America and those other JP Morgan banks said they're giving $30 billion, my mind says, hey, you'll be fine. There's no way those companies would throw that kind of money at it knowing that it was going to go to receivership or bankruptcy. Well, then we had all of a sudden the big drop down when their earnings came out and realized that they're not as liquid as they thought. They had a lot more redemptions. Their earnings are down. Their interest income is down. And now all of a sudden a question of, will they even make it and be solvent? So the big challenge here is, will it make it through normal operations, through money coming in? Because at this point, the talk track is it goes to receivership, which is where the FDIC is going to come in and say, it's now our property. We're now going to sell this thing off and make sure the investors are safe. That's the worst case scenario because that's essentially bankruptcy. So for me, I have to come up with what that number is, and I'll show you here in just a second. Yeah, John says it was halted 12 times today. Yeah, when I read the first halt, your butt puckers up a little bit like, oh God, here we go. This is the bankruptcy. I was like, oh, please don't go there. I just don't see that happening. But stranger things have happened. And I'm right to admit that I'm wrong. In this case, I still think I'm correct that it's going to survive, but time will tell. So when it goes into a situation like this, obviously there's tons and tons of panic out there. You can look at the volume here. I mean, the volume is extremely elevated right now. It's just freaking everybody out. So today it was one of those situations where it actually dropped below my average price. And let me show you here my calculations. So for me, as you guys know, I mentioned I have I have 40, which is a little bit heavy, but it's fine. I have 40 put options that were sold at 12 bucks, and I have some at 11 as well. But the main bulk of this trade is at the $12 point. So of course, I apparently have dyslexia when I wrote this out because I put FCR. It's not FCR, it's FRC. I will change that for you so I don't look so stupid on camera. Let's go back here and change it to FRC. There we go. So what does this look like? Well, my first opportunity here was I sold the March 31st put options, collected $1.50. Week later, I sold the April 5th, collected 65 cents. A week later, I collected $1.10, selling the April 12th, and then I sold the April 18th, which was at $1.31, and that's ultimately. And I didn't include. No, I got exercised on this one, so yeah. Now I'm actually I didn't. I have one more that I didn't add in here, and that is the 28th, which is going to be. Fridays. So actually, my cost average is going to be lower than this, and I believe that number was around 130. So I'm going to add another $1.30 to this. So that's 1, 2, 3, 4, 5, $6 worth of premium that I've collected. So what that means for me is if my strike price is 12 and I get executed at that, which most likely will happen because of these puts, and I've already collected $6 worth of premium, then my average price is actually $6. So in the grand scheme of things, it looks like I'm getting my ass handed to me on this current trade. However, I've been collecting premium since back here, right? I've been collecting premium, and a lot of this sideways action, just great premium. Therefore, by Friday, if FRC is above $6, I won't take a hit financially overall in my positions. If you sold puts and it stopped trading, what you will be keeping the money according. Yeah, so let me finish this thought, Michael, and then I'll correct you. I'll help you with that one because there's a huge problem with that. I've got to make sure we understand this one. So as long as it stays above $6, I'm not going to take any hit whatsoever. However, the talk track is now that most are concerned this is going to go to receivership, which is the FDIC stepping in and essentially declaring bankruptcy and selling off those assets, which should push this down to zero. That's the worst case scenario, and we talked about that a couple weeks ago. I asked you, I said, what is the absolute worst case scenario? That's it, receivership. If I get this thing on Friday and get those shares assigned to me, then I'll have to do some damage control. But at least I'm not freaking out because it's not like I'm going to be long at 12 and now it's at 6. I've lost $6 per share times 40 shares. That's $24,000. That's not the case. In this case, I will. If it closes at 6, I'll actually break even with all the premium I collect. So there you go. I don't need to pray. There's no worry. The market is what it is. I'm not going to get myself upset about it. I made those account for that. Exactly. And that's the thing about it is always have a plan in place. My plan was I'm going to keep selling and collecting this great premium. And in the back of my head, I always knew, and I mentioned this multiple times, that this is the most dangerous thing you could be trading right now is FRC. And I said, look, the worst case scenario is it goes to zero. So, okay, I'll keep trying to lower my dollar cost average just in case that happens. I still don't believe that FRC is going to receivership. I can't, like I said, I can't believe that JP Morgan would have dumped $30 billion into this thing knowing that it was going to go to zero. They'll try to bail it out. And here's the other part of this that gets tricky is right now, because the talk track is receivership, banks may not want to put in any more money because why would they put money in knowing that that's going to go into receivership and it just gets taken away from them? So that's the conundrum that we are in with First Republic Bank right now. I did see some questions. There was a question. I forgot who sent it in. I apologize. My brain is not quite working properly, obviously. There was a question about First Republic, and let me see real quick here. I think this was from Jeff. And Jeff was saying, what if I sell like those 350s and collect that premium because I'd be fine to be an owner of First Republic at 350. You could certainly do that, but you gotta look at the pendulum of probability has now swung from not going to go to receivership or not going to go bankrupt, now very aggressively swinging that other way. And if you do sell those puts at 350, remember you are on the hook to buy them at 350. So if this goes to receivership, while you sold those puts and you still have that contract open, you will now be essentially required to buy them at $3.50, and then it goes to zero. So you'd lose all your money that you invested in that one. So that's the question I want to get to with Michael. He says, if you sold puts and it stops trading, you will be keeping the money according to. Yes, you will be keeping the money, right? So let's say I sold it and I collected in this picture here, and I don't remember what my most recent one was. I think it was like $1.30 or $1.50. Actually got better premium, but we'll keep it at $1.30. Let's say it was this last one here, that's $1.31. And I have 40 of them, so I'd collect 40 times $131. So roughly, call it $5,000, almost $5,000. I get to keep that $5,000. But remember, if I sold that, and let's say the strike price was $12, I am required to buy that security at $12. So if it goes to zero, whoever bought that put from me is going to love it, because they're going to be able to sell their shares at $12, even though it's into bankruptcy. So regardless of what happens, anything below $12, I'm going to be required to buy it, even if it stops trading. Yes, I keep the premium, but if I'm required to buy it at $12 and it goes to zero, I'd much rather give that $1.31 worth of premium back, so I don't have to take that trade. JP Morgan thinks there, Bob Barker. JP Morgan didn't get to be the biggest banks in the world for nothing. They know some stuff. Let's see. Ganesh says FRC was a bank and not a startup kind of thing, and it was $150 6 months back, so any good stock can fall. Yep. How to protect against it would have been to be buying puts. Earlier on, once you kind of knew that this financial crisis was coming, and if you were already long FRC or any of these other banks, you could buy puts as a hedge for your position, right? That's typically the way that we look to buy protection on our portfolio or any position, is buy puts against it, right? So if you're long, let's say, I think I've had this question before. One of you, I don't know if it's you're watching now, I think it was IBM. Let's just use IBM as an example. Had worked for IBM and was being in their share program. So basically, IBM would allow their employees to buy shares of IBM at a discount. So they amassed a large position of IBM. Well, if you start to get the feeling that that company is going to be slowing down and a bulk of your portfolio is in that stock, well, just spend the money, buy some puts just in case IBM collapses. Therefore, you're not going to lose all that money on your shares. So puts would be the way to go to protect yourself. And that's why the premium was so high on puts, is I think clearly people were in the know. There's some people who have way better connections and smarts than me, knew that this was going to happen and was on the horizon. So there you go. Tom says, just looked at FRC from the moment Cramer mentioned it, and it moved up 3.4% over the next 4 days. Are there any studies on the initial Cramer effect? Yes. Now, Tom, that's actually a great question. This is what made me just not trust Cramer at all. I want to say it was back in 1999 or 2000. So it's a long time ago I got this report. And it was basically a college report that these kids had done where they went on his, I think it's a lightning round, where he says, buy, buy this one or sell that one. And they went through every pick that he did over a period of time. And every one of those that he said buy on jumped. And there was a percentage, I don't remember the percentage, that it moved up. But they all moved up. And then the crazy part is, over the next 12 trading sessions, 100% of all of those stocks that he said to buy that shot up actually gave all those gains back and then went lower. From there, you can tell, just based off that information, that it's his buy recommendation that's causing the sheeple to buy that security, and somebody's on the other side of that trade selling it off. My guess is it would be institutional, knowing that they've probably told Jim Cramer to say buy on these 10 stocks over the next couple days. When they see it pop, they go and unload and push it all back down. I don't know if he's a scammer, Patrick. I wouldn't call him a scammer. What I would say is he's a puppet. And I think that he's being told what to push, he's being told what to buy or sell, and he's given a talk track. And he used to work for Goldman Sachs, so he's got connections there. And if I make all of you, a couple of dollars, great, cool, good for you. But if I can push an agenda from somebody who has so much power and influence and can better my life in a million different ways, who do you think I'm going to be catering to? Jim Cramer's case, I would argue he's catering to the institutions and doing their bidding for him. They now have a patsy on TV that will say what they want him to say, And we've seen the results. I mean, he gave a huge buy recommendation on Netflix. He gave a huge recommendation on Coinbase, a huge buy recommendation on FRC, and many others. And all of those have dropped 70, 80% from where he mentioned it. So it's terrible. You know, should he feel bad about it? Honestly, yes. I could not live with myself if I knew I was absolutely screwing people left and right. And he is absolutely screwing people over and over and over again. So, you know, just either don't watch it. You have three options. Don't watch it and laugh at it, or watch it and do what he tells you to do. The third option is going to cost you the most money. The one that keeps you the sanest is probably just ignore the guy altogether. Let's see. Yeah, he always has CEOs, CFOs, right? And he should, correct? You know, he's a big finance guy. You want to bring in the people. It's kind of like if I had the opportunity to bring on top-notch traders from exchanges, sure, I would do that as well. I mean, if that's what your show's about, it's about money, it's about investing. Yeah, you want to know what those CEOs and CFOs are saying. However, most of those individuals are going to pump their agenda and make their company seem amazing and rosy and awesome. Should there be more regulatory oversight than that? Yeah, probably. Exactly, Patrick. It's pure entertainment. Oh, yeah, he just said Chipotle. What is that, CMG? He said it should be over $2,000. Hey, look what happened today. He just said that. So it jumped up today. This is probably on earnings. So because he's, I think let me real quickly bring up his Twitter feed. And we'll just go. He may have blocked me because I've been insulting him recently because he's just ridiculous. Let's go Jim Cramer, and there it is. So let me bring up that tweet for you. And by the way, you guys, you can join the CNBC Investing Club with Jim Cramer. You might want to do that. Wow, he could be so good. Let's go down here because I think he just tweeted out about Chipotle. Yes, Chipotle belongs north of 2,000. It was a good that was a good quarter. Okay, it was that good a quarter. All right, cool. There you go. But a lot of these, you want to have fun, keep your eye on them. They'll probably go back south the opposite direction of where he's telling. Yeah, my mission is to make you money. Good luck with that one. Is that what it said at the top? Just seeing here, because I think I've heard him say that before. Anyway, let's move on from Jim Cramer. Oh, and Patrick, I'm surprised he doesn't have more than 2 million. He is a household name. I mean, if you think about it, he's done an amazing job. Kim Kardashian, Kanye West, household names. Everybody knows him. Jim Cramer as well. I have people who don't even know what finance is, but they know Jim Cramer. So, anyway. Please comment on Tesla drop. Yeah. I mean, I'm not looking too much at the fundamentals, but you do have a situation here on Tesla where that gap most likely is going to fill. So you have a gap that started way down here at about $144. We've been traversing in this sideways yellow box for months now. And all of a sudden it broke down. So that sideways consolidation is now done. Most likely you're going to start to see this thing drop. Of course, we know from the earnings statement that competition is getting better. They've had to lower their cost of their vehicles in order to stay competitive out there. That's going to cut into their profit margins. So I think it spells a little bit of doom and gloom, not doom and gloom, but a little bit of pain point here going forward for Tesla for a little bit. It had a great run off those lows of sub $100 up to 220, and here we are drifting down lower. So it looks like starting in mid-February, that downtrend has started. And I don't know how aggressive it's going to be. I don't think it's going to be too aggressive, but you just never know. But again, I do think that this gap's going to have filling. I do see it going down to 144. I may actually be okay buying or selling puts at 144, but I'm probably not going to be doing much trading over the next couple of days as I'm going to stay in bed and watch TV. I know. It sounds terrible. All right. Let me go over to... Where else was I? I want to look at some economic announcements real quick for today. Here we go. So we have some announcements came out today. Obviously, Meta is the big name out there today that reported earnings. You had Meta, Boeing, Thermo Fisher. But notice Meta, again, another nice pop here that could really help out the NASDAQ. Most of these other indexes were negative on the day, but because we had Microsoft, because we had Google report yesterday on earnings, that really saved the NASDAQ today and made it one of your best performers, which I'll run through those top 7 here in just a second. Thermo Fisher beat earnings. They were down. Boeing missed sharply, but they were up, so you just never know. But let's take a look at Meta. Here's your Meta chart. Things looking great. Of course, my eyes are automatically drawn to this gigantic unfilled gap here that I don't like, but we'll have to wait and see how that one pans out. Oops. Up down a little bit more. There's that unfilled gap. Now, if you look at where we are right now, it's not showing on the screen, but over here on the right-hand side, you see post. It's at 233.28. So when that announcement came out, I'll show you on a 5-minute time frame here. There's your rip up to the upside. Now remember, Meta is one of the heavier weighted components of the NASDAQ. So this is certainly going to have an impact on the triple Qs. I will bring it up here so we can see real quickly what's going on with the NASDAQ futures. And there you see up another 0.61%. So these are all going to be skewed based off the numbers that you're going to see on CNBC or Fox, because I'm doing it live as of this show. So we are now officially, an hour and 20 minutes after the market closed. So this is now reflecting the earnings announcement. So I'll go from bottom to top here. Crude oil down 3.59%. I did sell puts today on XLE. I sold the 79 puts expiring on the 19th. So the 79 on XLE today. Crude oil looking pretty bad. Let's go down to your daily here. So we talked about it filling this gap all the way. Not only did it fill it, but it exceeded the gap. So now it's probably going to come running back down into this area here, which is a tiny, tiny little base rally. Right in there. And that's where I would anticipate seeing this bad boy go to over the next couple of days. No surprise there if it keeps on dropping. So that's your crude oil chart. Worst performer of the day, down 3.59%. Russell 2000, which I wanted to sell some puts on today, but the premium just wasn't there, at least to my standards of premium. Bottom line, though, still in the middle of this giant yellow box going sideways between 20.35 and 16.45. Maybe too wide of a spread for most people there, but it's still stuck on that range-bound market. Dow down 0.68%. I had it stopping, thinking we were going to stop and hold at this yellow box of demand. That's gone, evaporated right through that one and went lower. So this is kind of an ugly picture if you're a supply and demand trader. Where's your next stop, right? If I look down here, there's only one, and it's not even that strong. And that's right around 32,580, which would be 900 points lower than where we currently are at. So that's not a good sign here on the Dow. Gold down 0.42%. I did sell some silver puts today. I sold the 22s again. I had some open and I sold some more because I'm bullish long-term on silver. So I sold a bunch of silver puts today at 22. There's your gold. It was, again, down 0.42%, closing just sub 2,000 at 1,996. Technically, nothing overly interesting here on what's going on with the gold chart. I really want to see it hold these lows right around 1980 and maybe rally or continue on trending to the upside there. But right now, not the best technical chart. S&P 500, third place on the day, down 0.42%. Similar to what we saw with the Dow. It actually broke down below these lows, which is not good. Your next stop, if I read this one correctly, and if what I see is your next stop is down around 4,000. That's about 76 points lower than we are currently on our market. And, today we dropped 17 points. Well, based off this, it looks like a good continue on down here. And pain is starting to precipitate. I'm hearing the media push more and more fear, just kind of, spreading the fear out there. Meta quietly backed away from metaverse development. Yeah, they did. Well, you know what? It's smart because Zuckerberg, whether you love him or hate him, I do like that he was going after the metaverse and trying to be the king of the metaverse. However, I think he finally realized that the metaverse is a game. It's fun. It's cool. It's a way to escape. What's more impactful is something that's not recreational. I would argue that the metaverse is recreational, right? Whether you're doing business on there or you're playing games or whatever, it's recreational. If you look at AI is far more impactful on every level. And I think Zuckerberg realized that now Facebook is going after the AI market as well. So yeah, they moved away from the metaverse, pretty much scrapped that whole thing, and now going into AI, which, you now have Google, you have Microsoft, all heavy into, you have Bard and ChatGPT. So the competition is heating up more and more and more and more luck. All right, sorry. So where was I? S&P. So you look at this level here down around 4,000. That's the next potential stop here. I was really kind of disappointed we didn't get follow through on the break of this pennant formation, but it is what it is. All right, NASDAQ being saved by the FANG stocks. Clearly being saved by those stocks today. You had Microsoft and Google prop it up, and now you're going to have Meta pop it up tomorrow. And then we do have some big name earnings coming out in tomorrow as well, which I will show you here in just a second. The big daddy, one of the big daddies, one of the only $1 trillion market cap companies reporting. Just a few of those, and the one will be reporting tomorrow. What you have right here, though, is actually a bullish harami. So you look at the NASDAQ 100, we had that horrible red day yesterday, gapped up today because of those earnings announcements. It'll probably gap up again tomorrow because of those earnings announcements. So keep your eye on this one. This may be a nice little reversal here and cause this to move back up, maybe even towards that red line we have at the top at 13,131. And finally, Bitcoin. Rejoicing in the FRC problems, but gave back a lot of those gains. It hit 30,000. I mean, you hit up here, the high today was 30,050, but then came screaming back down to just under 28,000. It's currently trading at 27,900. And again, remember, Bitcoin was created as an alternative payment system, essentially allowing you to be your own bank, which I've discussed multiple times on this program. And I think that's becoming more and more of a reality for people who are getting frustrated with all the shenanigans going on by the banks, the Federal Reserve, the FDIC. It just seems like it's a mess in that financial services industry. So that's your top 7 out there today. Now, there's some other things to be cautious of. We saw that dollar index, which has just been slowly drifting. I would argue it's drifting sideways, and I'm going to keep this head and shoulders pattern on here for as long as it takes, either until we break this high of their shoulder, which is at 106, or we start to reverse down. Right now, it's just basing and hugging that neckline right around 101. Another piece before my voice totally gives out is that 10-year. Right, so the 10-year, I would be expecting a lot more moves given what's been going on in bond markets, but it's just kind of sticking here, right? No real move up or down, just kind of consolidating here right around that 3.5% mark. Again, we'll have to wait and see how that all pans out going forward, but I've got that low line there at 3.2, call it 3.25. If we get below that, then I think you'll see much more downside movement. Fake smarts. Good one. I like that. Okay, let me go into what's happening out there tomorrow. Again, I told you I'm going to do a shorter show today because I'm having hot flashes as we speak. You can probably see I'm starting to sweat over here. The beauties of having COVID. Big news for tomorrow, and I'll get the graphic going. Thanks, Tim Sabick, for the graphics. That's what Amazon will probably look like after hours. Have the popcorn ready. Be ready for that one in a 1-minute time frame. Amazon will be your popcorn trade of the day, reporting aftermarket close, but you also have some other huge names reporting aftermarket. Actually, there's one huge one on here other than Amazon, and that's going to be Intel. Intel reporting aftermarket close. Now, before this market opens, there's also some huge names as well. You've got Merck, you've got Gilead Sciences, Altria, Caterpillar, Bristol Myers Squibb, MasterCard, and AbbVie all reporting earnings before market opens. So a rather busy day on the earnings front for tomorrow. So keep your eye on that one. Should be a busy, fun day. As far as the economic calendar goes, yes, you do have stuff to talk about for tomorrow, and I'm just going to bring that calendar up over here. As you may know, I'm sure I've told you on this program, but there are 3 versions of GDP that come out. The first one's called the advanced. A month later comes out the preliminary, and then a month later comes the final GDP number. So the advanced is really your first view of what the expectations are for GDP, and that's important because it's going to steer a lot of Fed policy. So if you look here, advanced GDP comes out tomorrow morning at 5:30 Eastern time, Pacific time. So that's 1 hour before the markets open. They're expecting GDP to go from 2.6% to 2%. You also have unemployment claims. You also have pending home sales, natural gas storage. So a lot of pretty good economic announcement pieces. You also have if you're trading the yen, the Japanese Bank of Japan outlook report, as well as their monetary policy statement and their policy rate. Nobody really shocked that they're going to stay at negative 0.1%, but I'm really curious to see if in their statement they talk about potentially changing. Again, they've been at negative 0.1% for a very long period of time, and may do them justice to start to raise that and move up into positive territory versus negative territory. Let's see, Ganesh, if FRC does not go bankrupt, do you think it's a good value play given its very cheap valuation? I think it's worth it. I think it's worth your gamble portfolio. Like if you have, let's say you've got a $100,000 portfolio and you've got, let's say, $5,000 that is your gamble portion, right? You should always segment it into, this has got to be safe, this can be a little bit risky, and then here's my gamble portfolio. This definitely goes into the gamble portfolio. You know, you from here on out, you should make the trade in FRC assuming that it's now going to go into receivership and bankruptcy. Start there. That way you'll never be disappointed. If it does go bankrupt, okay, you lost it. If it does look like a value play and survive and all of a sudden get back up to, $10, $12, $15, $20, $30, great, you've done well, but it's a gamble at this point. So I would categorize it a gamble play. I don't know. I wouldn't say it's very cheap valuation. It's very cheap right now because earnings are gone. Earnings evaporated, deposits disappeared, so now all of a sudden they have to reset this entire company with a lot less money. Remember, for a bank, it's all about how much money you have, assets under management. If a bank operates off of, let's say they have $100 billion, they can map and strategize a plan based off the $100 billion. And yes, they're going to have slight ebbs and flows. It might go from $100 billion down to $90 billion, up to 110, back to 100, up to 130, and it'll move like that. But if your bank has built a plan off of $100 billion of assets under management, so that allows you to do your bond portfolio strategies, your lending portfolio strategies, what you're paying in interest, all that is based off that AUM number. If all of a sudden that number goes from $100 billion down to $20 billion in a period of a month, all those calculations have to be redone. You don't know anything from a numbers perspective of how that company is going to survive, because now they have a lot of overhead to help support a $100 billion company. Well, my guess is to survive, you have to start gutting that thing, getting some people out of there that make way too much money, start saving costs in some places so that over time they can survive this. That's the fine details. The bigger detail is, were their investments bad enough, like Silverbank, and how they're going to utilize this capital going forward that was brought in by JP Morgan, Bank of America, and does that allow them to survive? I just don't know. I don't know. So I would say, Ganesh, if it's money that you can say, am I okay if I lose all of this? Then go ahead and buy FRC. It's just too big of a gamble right now. You can buy $7 calls on FRC for next Friday for about $110 per contract. Not my thing, though. Yeah, I'm not doing it either. My positions are done on FRC. We'll see what happens if I get exercise, and maybe I can get some premium for calls. But yeah, I'm not going to do it. All right, so I've gone through earnings, gone through economic announcements. 34 minutes into the program. Wow, surprise! I made it 34 minutes into the show. So that's going to do it for me, guys. I'm going to go wrap up. I'm going to go lay back into bed as I'm starting to sweat here again. So we did your economic calendar, earnings calendar. We got all this stuff out of the way. Careful out there with your First Republic. And, yeah, as the graphic shows you, I'm on the mend. I had a really high fever the other day, body aches, etc. But respiratory, I'm fine for now. So we should be good. I'm not going to do a show tomorrow or Friday. Hope you guys understand that. I'll be back on Monday. I should be back in full force unless I'm just dead to rights. I just want a couple of days where I can just rest and not do anything. So thank you guys so much. I hope you enjoyed today. I hope you let's all cheer for First Republic to jump back up to $12 and a penny, so I'm not forced to own First Republic, and I'll sell calls against it again. Anyway, thank you guys very much. Have a fantastic remainder of your day. Be careful with those popcorn trades of the day tomorrow. Amazon's going to be a wild one after market. I'll be watching that one from bed. Take care, everybody.